Right now, we're turning to a conversation where we're going to be looking at reflections and perspectives on the post-Marikana labor market in South Africa. To help us unpack this is Gavin Hartford. He's a consultant at Stakeholder Solutions. Gavin, thank you for making the time to join us. How has Marikana changed the labor market in South Africa?
Well, I think it changed it in a very fundamental way, because for the first time in 20 years since the democracy, where you saw wide ranges of workers taking industrial action outside of the collective bargaining system. You saw the collapse of the majority union in mining, the emergence of a new union, and a lot of uncertainty with multi-unionism now entering the dominant space of the mining industry. So I think we have got a very new field to engage on going forward.
Is there a sign, Gavin, of settling down with this new arrangement that you talk about, or are things still unstable?
I think it is settling down. I think, you know, it's 2 years, well, it was 2012 and we're in 2015, and I think employers and unions are both, there's an acceptance that AMCU's here to stay, and indeed there are new unions, even as we speak, being registered in Rustenburg. So I think we're entering a period not just about AMCU and the emergence of one union, but of multi-unionism starting to dominate the labor market, whereas historically, over the last, well, ever since the formation of COSATU in the mid-80s, the COSATU unions have emerged as the dominant majoritarian type principle that's been embedded in industrial relations, and that's fast changing. It's more of a all-comers approach that is now dominating the labor market.
Do you think we'll see any convergence in terms of interests among the unions themselves to say this is what we want for our workers? Because it did look like in some stage it was a tug of war, you know, people trying to get more members, and the demands, they were also very divergent. Do you see between, I mean, among Solidarity, AMCU and all the other smaller NUM, having a convergence, really?
I think that will come in time. I think at the moment it's just a bit of a competition, in fact, by all unions to capture majority unionism in the sectors in which they're organizing. So right now I think the dominant feature in mining is competition between the NUM and AMCU for membership. But I think in the longer term you might find different alliances being developed between emerging unions and established unions right across the labor market. Before
that potential consolidation happens, Gavin, is there a possibility that we could see another Marikana in South Africa?
Well, I think the circumstances that drove the Marikana incident was not just about the terrible massacre that we saw in August of 2012. The underlying drivers was a massive dislocation between frontline management and employees, the lack of influence by management over employees, and a dislocation as between members of unions and leaders, and a big gap opening up. Now, I don't think that those trends have changed much, notwithstanding new unionism. Unions are much more receptive now to members' needs and members' interests. Indeed, they are. And in a competitive union environment, they keep on having to go back to their members much more than before. But there is still a large gap between the ordinary members' needs and those of the leadership, and that could, heaven forbid, but it could spark further conflict into the future if it's not addressed.
A lot of comment was made at the time about the structural problems historically that haven't been changed by democracy. Migrant labour, the way of looking after people in isolated places, living conditions and all that kind of thing. It seemed like a wake-up call for the industry, for government, maybe for the unions, but no one seems to have woken up. Are the structural problems so deeply entrenched that actually we can't change them in our industry?
I think they are deeply entrenched. I think, you know, everybody wants, I don't think that there's a lack of will. I think that government, business, labour all want to see change. But bear in mind that these industries are 150 years old. They've operated shift patterns, housing arrangements, transport patterns, migrant labour have been, this is the bedrock of the industry, and to change those things is not something that is going to happen overnight. So I imagine that we're looking at a long process of incremental change before we reach a stable environment into the future.
Now, one of the things that usually comes out, especially post-Marikana, in a lot of the conversations that we've had, was this idea of getting workers to have a stake in the company, and it's been a couple of years now, and there doesn't seem to be any traction along that idea. Has there been any fundamental change in just how we understand remuneration and incentive structures for workers relative to what management and the leadership are earning? Because that's really one of the really sticking points that led to Marikana as well.
Yes, very good point. You know, in the remuneration and reward structure of any company, there's shares, which most of the companies across the mining industry, for example, have done share deals. But these are very large companies in terms of their market cap. So those share deals might represent 2 or 3% of the market cap of the company. Not enough to incentivize a change of behavior. You know, global research tells us that employee owners need to own like 1/3 of the company before you see real change, and it has to come with change ways in which to manage people to be much more transparent with information, with disclosure of information, and so on. So I don't believe shares are going to be the big driver of the kind of productivity outcomes that we're looking for. I think there's much more scope, in fact, in the space of variable pay, in the bonus structures, something which is much closer to workers, which they can feel at a weekly or monthly pay basis, where we need to find ways to address what is a structural problem in the South African economy, which is the inequality problem, and one of the worst in the world. I think so long as that deep inequality exists, the incentive for employees to actually participate in productivity changes and so on is limited by that fact.
And of course the big question is, how do you bridge that gap in times when commodity prices are low and everything else is under pressure? Thanks to Gavin Hartford, consultant at Stakeholder Solutions.